Now everything moves faster with technology, with the amount how quickly money moves. Before, money had to settle like 3 days, a week before it's like able to go to a brokerage account. Now you have instant direct deposits. Once the printer goes on, the money goes right away to the banks, and banks right away. Fed already has enabled pushing liquidity directly to the stock market, so their recovery could be super fast. And with Bitcoin as well, by trading puts and calls on the SPX or the VIX, you're technically always going to be paying 60% long-term capital gains no matter what, and your profits are only getting hit by the short-term capital gains about 40%. Whereas if you would have been trading ETFs like the SPY, the QQQ, you're actually paying 100% short-term capital gains. Now, that's a nice little trick to know. So whoever is trading SPYs or is going to want to take a bearish position on SPY, definitely use the SPX because you're going to take advantage of that 60% 1256 rule, long-term capital gains. Yo, hello guys. Welcome to the Moonboys podcast. Today I am starting off the show, ROM Reactor, but of course nothing here is financial advice. We are just a couple of DGen Moonboys trying to 10x portfolios. Give or take our opinions. You're the one who makes the final decision, so don't blame us if you win or lose money. Hey, maybe you don't want to win. You want to lose money, and then you follow us and you make big gains, and you don't like that. But you could give it to donations and charities, so don't complain about that. Anyway, we have a beautiful show today. I'm a little bit under the weather, so I'm just gonna do a little news session to kick off the things, and then we can dive into the charts and everything from that. So this way we'll kind of be updated right away to what happened. So boom, let's go. Breaking news time. Now this week, over 820 billion gets wiped from US equities. Crypto total market cap drops 100 billion as Bitcoin falls below 270k. Fed holds rates steady and predicts just one cut for 2026. February PPI comes in hot at 3.4%, above 2.9% estimates. Stripe introduces machine payments protocol as Tempo mainnet goes live. Oil prices spike as Israel attacks Iranian gas plants. SEC approves trading of tokenized equities on Nasdaq. Dow Jones partners with Trade XYZ to launch first official S&P 500 perpetual contract on Hyperliquid. Polymarket to launch Situation Room Bar in Washington, D.C. Visa releases payments CLI. Kraken pauses IPO plan due to market conditions. Crypto.com layoffs 12% of workforce citing AI efficiency. FTX to distribute $2.2 billion on March 31st. U.S. gas prices hit highs not even seen in 2022. Meta shuts down Metaverse project after investing $80 billion. Yeah, so that was it for that. But yeah, it looks not good. Oil prices going up. Don't seem to be stopping. Trump is giving the ultimatum. I guess it's 24 hours now since Saturday to ceasefire, but obviously, why would they? Especially since he started the war, they're asking for like damage repercussions and everything, right? Yeah, we can't really believe what is coming out of Washington D.C. anymore. It's all scripted. Not looking good. Ultimatums are never good. We all remember what happened to the tariff ultimatum. We have some like. The only bullish thing I see is I republished our indicators earlier, so now everybody should be able to see them when they add indicators on the computer on TradingView. If you type in Moonboys, you should be able to see all our indicators, community, and also our script. So it should be all in community. Maybe it takes some time to publish, but I did publish them also. But yeah, in Liquidation Heatmap, we do see that there's a new kind of shorts, 150k short positions, and this could be a new target that the market makers might try to push Bitcoin up. Right here, 140k might push up to hit. Will it happen? Like this one didn't get hit 150k when it did happen over here, but it did go above a little bit of the 100 daily moving average before that occurred. And you can see there was quite a few shorts at this level, similar to how it was at this level. So could be that was it. That was the peak. And now we're going back to Doom. We flipped SAR. We're going to go back to flush mode. Or it could be another little fake out to the top. We close the gap fill and then flush mode. Again, probabilities are against you here because there's quite more liquidation, long liquidations to the downside that will get hit, especially if we get pushed to 50K versus just as one little shorts that you might liquidate, but you're going to have to pump the price a lot. And if you're the only one pumping the price, you're going to be buying a lot, and market makers might, rather choose to keep their profits that they made from here to here versus, try to liquidate a couple of guys here and then get help holding the back when everybody starts stalling again, or another short liquidations would come from here. And they get pushed here very quickly, so they wouldn't have time to get out. Everything is planned by these guys, right? So I can only look at the chart and tell you that, hey, there's more profit for them pushing it to the downside and just clipping the support here rather than adding extra support to get these guys. Now, I also did update the production cost indicator. The reason why they were kind of not they were hidden is because I had too many charts in the indicator picture description. So now I just kept I redid it with the just the indicator that Moonboys production cost or liquidation heat map in this case. But yeah, as last week we did have a drop in production costs. I'm gonna update this again this week, and if that production cost did not raise or drop further, again that would confirm we have even more leg room to the downside. There's a little bit over here. You could see volume is diverging over here. So you have volume spikes lower, 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 while the price is going higher and higher and higher. So this means less buyers paying more price for Bitcoin. Okay. And of course, let me take a look at the comments, see what you beautiful bastards are writing. So Theo, let's fucking go. That's right. And Matt and Theo, if you guys are watching, come on live. Anytime, I'll push you guys in. I see there's a guy at Device Not. Well, that's might be my friend, but I think he's watching from the StreamYard instead of the link I sent him. Yeah, cool. So next things up. So yeah, S&P 500 is not looking good. This is all in cahoots with the Iran situation. The markets are telling us. So I did figure out something cool over the weekend. Obviously, I kind of forgot about Jerome Powell, that he was going to have a meeting. So my Wednesday, Thursday trade got a little bit distracted by him. And yeah, as Jerome Powell says, fuck your puts, fuck your calls. Jay Powell got you by the balls. And, that's something I forgot to say in the morning when I woke up. I didn't put on Ivan on Tech as he's streaming in the background. I was a little bit under the weather. I think I had very bad back pain. So it was just a messy day altogether. And the moment Jay Powell said, good afternoon, the stock market went down with it. And so far, we did close below the 200 daily moving average. We slightly bounced off the 50. Well, we're actually holding support at the 50-week moving average, but nothing is looking good. We have a bearish SAR on a weekly. We have a bearish SAR on a daily. Tomorrow, will the ultimatum mean Trump is going to bomb Iran and oil prices spike again? Then we're probably going to see another flush, and that flush will be to the 100-week moving average at 6,000. At 6,000. Of course, we maybe see a little bounce over here on Monday if Trump is able to calm the markets with his tweets. Possibly maybe Monday, Tuesday, Wednesday, we might see like a sideways action here like this. But there's going to be I believe a day, either Tuesday or Thursday, where we're going to push towards this 100 weekly moving average, exponential weekly moving average. And to take advantage of options trading the way I have been doing it, which I've been trading the index options, you have to look at the ticker SPX. Now, SPX, if you are, I would assume in Canada and US, you guys are trading with the same rules. So options gives you, index options specifically give you, I think it's like a 1226 rule. Let me see, VIX options 1226 tax rule. Hang on, 1256. So what 1256 is means that no matter how long you hold your position, you pay 60% long-term capital gains and 40% short-term. So by trading puts and calls on the SPX or the VIX, you're technically always going to be paying 60% long-term capital gains no matter what, and your profits are only getting hit by the short-term capital gains about 40%. Whereas if you would have been trading ETFs like the SPY, the QQQ, you're actually paying 100% short-term capital gains. Now, that's a nice little trick to know. So whoever is trading SPYs or is going to want to take a bearish position on SPY, definitely use the SPX because you're going to take advantage of that 60% 1256 rule, long-term capital gains. VIX, of course, still bullish, quite elevated. um, VIX is a mean reverting index, so the chances of it going down are way more than going up. But of course, during this time period with Trump pushing all this crazy stuff, volatility is going to be higher on S&P, especially if we start going down, which we are. So even though VIX right now is at 26, that's an affordable level. I'm looking to see a correction somewhere towards 22, hopefully, if we're looking at a daily. 21, retest this 50-day moving average, maybe even get close. That could be some good entries this coming week for another spike in S&P 500 volatility, which is what VIX tracks. And of course, if you track the volatility of the VIX, you have the VVIX chart. This is another thing I learned about today. Yep, we're getting alpha. And the volatility is tracked every 30 days. So VIX tracks the future 30-day volatility of the S&P, and VVIX tracks the 30-day future volatility of the VIX. And you can see it's very high. It's at 126. Usually that means you're paying a very high premium for options. And if you do sell options, you're actually getting that premium for yourself. So it's a very good time to sell VIX options. But of course, they're related to futures, so it's a little bit difficult to do that. Yeah, the Dow, again, also super correcting. Probably, yeah, they even closed below the 50. So the Dow for sure signals that it wants to drop more. It didn't even like hold support here. Nasdaq holding support barely, but bearish on a weekly again, bearish on a daily, not looking good. And the next support would be obviously maybe a bounce here, but a flush towards the 100 weekly exponential moving average. Now, ironically, Ivan, for some reason, uses the same weekly averages that I do. I don't know if it was a coincidence or if he somehow like naturally navigated to those. But I remember, Theo, you were using some different average moving averages, but you had your reason. It was a different guy. I think it was like 120 or whatever. But yeah, I was watching Ivan yesterday, and this stream, I think he did exactly half 50, 100, and 200. I guess they're very common. Those are the common top averages, and the only difference is Ivan uses moving averages. I use exponential moving average. Big reason why we use exponential is because during a long enough time frame, those exponential moves, they get more accurately averaged out, and they give you a more precise points. Now, of course, it doesn't always happen. Sometimes the long-term moving averages that are not exponential, they don't have a logarithmic equation built into them. They will hold as like super solid supports, but of course they might come later. That's why when we look at Ivan's Bitcoin 100, 200 moving average, which is sorry, where's BTC? So for Ivan, for us, the 200 is weekly moving averages right here. We're kind of already we were already on it, but his is like somewhere here, right? Because yeah, we have an exponential moving average, and you can see how we're hugging it and tackling it. Meanwhile, the 200 moving average didn't even get touched yet. So similar to how logarithmic charts show you better charting patterns that you could draw from prior trends. Similarly here, the exponential moving average just show a little bit more accurate and time sensitive points versus their traditional moving average counterparts. Yeah, so Theo uses the 21, the 55, 44, and the 125. I believe those are more related to stocks because stocks trade on a Monday to Friday. So they have 2 days, or actually 8 days out of the month that are not traded. So 21, if you add 8, it would be like 30. 55, if you add 8, would be closer to 60. So yeah, still, it's I think they use those more to keep track of these stocks because they don't have those days, those weekend trades coming in, which could be better. In stocks, you technically are more focused from day 8 a.m. to 4 p.m. close. You're not dealing with that weekend volume, which does play differently. So like, for example, the SPX is traded Monday through Friday. So right now it's closed. The next trade open is going to be Monday. While if I do SPX futures that are 24 hours, they're going to mess up. They're going to mess around with these moving averages. A good example would be here. Like if you look at Bitcoin that's something on Gemini is traded 24 hours versus the CME. You can see how the SAR is still bullish here, for instance, while Here it's already bearish, and this is happening because of those extra days of trading that influence the indicators. Yeah, it's getting a little bit hot here from me drinking the tea, but I don't know, Theo, do you want to join? What time is it? We're 1:59 already, so we're like 30 minutes in. Let me check on Ivan. Ivan is only 15 minutes in, so we're only 15 minutes in the stream. I'm just getting really hot because I have a little cold. I need to get like a blanket or so. I have a blanket actually. Yeah. Ooh, I need somebody to fan me. It'll be too expensive. Let's see what else. So going back to the news, PPI inflation. Yeah, the Fed. They basically are not cutting. Nothing really significant happened here from when I looked at it. Like there was no real like something that says like, "Hey guys, this is really bad." In fact, if anything, this actually is a bullish report. So I think it was more like this Jerome Powell when he talks, he just like talks reason versus like when Trump he talks like euphoric and like a kind of dumb brain when Trump talks. This is the greatest because it's the greatest. It's the greatest that we ever seen since the last history greatest. Blah blah blah. Trump will say the greatest like 10 times in one sentence. Jerome Powell is a very educated guy. So when he talks and people listen, people are like, "Oh man, this guy doesn't sound like he's talking bullish." But yeah, in reality, technically the GDP projections grew from December by 0.1%. So we are seeing in 2026, 2027, and 2028 that the Fed is actually expecting the US economy to grow faster than what it was in December. So that's all bullish, right? The unemployment stays the same, it does not increase. But the markets didn't really take that as bullish news. And in fact, it dumped on Wednesday. So we do see also that there's only going to be a one decrease in December, which is going to go push it to 3.5%. Currently, interest rates are at 3.75%. With that said, interest rates did point a rosy picture this week as they spiked above their prior highs. This is the 10-year minus the 3 months. For me, this is called the mega recession indicator. Once we hit one, you basically want to get out of everywhere because at that point, the drop can be significant, like 20 to 30% in the S&P, and the recovery, you don't know how long it's going to take, and you're better off holding cash. So we're getting to that level. We are also reaching some RSI peaks, but of course, if we we overshoot the RSI 75, 80 level peak, we might very easily get to this one sooner than any of us predicted. So even though it could go sideways for a long time, as it did here, once it starts climbing, it actually climbs pretty quickly. And if we look at this in a weekly chart, we can see that, yeah, when it does climb, I mean, 1, 2, 3, 4, 5, 6, 7. Like in 2 months, we might be already overshooting 1%, and that will be like in August. Very bearish. Then September comes, and October we might have even more flushes downwards. Now, will the bottom occur then? After this indicator hits and after everything starts tanking, and then they have no choice but to put the printer on, start a new scheme with tokenization. We're going to tokenize this, we're tokenizing that, we're adding so much liquidity to the capital markets, blah blah blah. Market's going to start pumping again till a new exhaustion point, and then this is where it might be interesting with the S&P. Like, let's say we correct here, we could do something like a Fibonacci retrace. So let's say our correction is going to be the 200, right? So that means we might actually recover to 8,000 and then crash again after this. So even though in September, October time, we might be going towards this 200 or even already recovering towards the previous all-time high, depending how much liquidity injections they start pushing in to the markets. Nice. Yeah, so the weather report has been done. We did that initially. Yeah, so we could actually reach 8,000 if we see a correction like that, and then it starts climbing back upwards. This is something to keep a look at, because then it might reach 8,000 and it might do another crazy correction. Nothing is certain. Nothing is certain in S&P. In 2000, in the 2000s, we had this sluggish move right here. Sorry, you can see this. When you do logarithm, you see everything more clearer. So like you could see how we didn't just go below the weekly 200 during the dot-com bubble burst and the Iraq war compounding effect. Actually, we dropped significantly below. So we had a nice correction of, oh shit, wrong one. We had a nice correction of, oh my god, again, wrong one. What the hell? Which one is it? Hold on. Price range. There we go. We had a nice correction of 50%. And then we had another nice correction of 50%. And we never went above all-time high. And this was with all the securitization, mortgage-backed security, contagion effects, this and that, bundling everything. So now maybe we'll see tokenization. Maybe we'll have a 50% crash to 3,500. And then we're going to have another bump push up to 7,000. Well, this is going a little bit too high. Maybe like over here by 2027. This took a long time. This was like a decade to even happen. But now everything moves faster with technology, with the amount how quickly money moves. Before, money had to settle like 3 days, a week before it's like able to go to a brokerage account. Now you have instant direct deposits. This might be so quick beyond our lot, and then in fact we might not even see something like that. Like I just said, we might just see a correction here and then boom, another all-time high, because it's already so instant. Once the printer goes on, the money goes right away to the banks, and banks right away. Fed already has enabled pushing liquidity directly to the stock market, so the recovery could be super fast. And with Bitcoin as well, this is where it gets interesting. With Bitcoin, like, will we reach these liquidations over here, and will that be the bottom? Will these liquidations be the bottom, which are around 100 on a weekly? I guess you could see it better right here. These two liquidations on a weekly time frame. Maybe this one as well. But will this be a bottom? Like, we flush here, then when we go back up, or will we flush all the way here? It's gonna be interesting to see, because once the printer goes on, I think Bitcoin and gold is gonna go back again to absorbing a lot of this money. We had a message. Can't post any. Let's see. That was a weird sound, but yeah, interesting times to see what Bitcoin will do with all of this. If the S&P is contracting 50%, we might even go here. So it's gonna be something to keep an eye on. With Ivan's following the 2022, this is not following 2022. I think this is something way bigger and different than 2022. He is overlooking that situation heavy, especially if you look at the interest rates. It's not 2022 at all. We were starting off maybe following 2022, as we did here, where it was increasing because of the war. But then in 2022, Biden, they had a very high interest rate policy, which pushed us to super negative territory. Here, on the other hand, they have a loosening interest rate policy. So we're actually getting pushed up to those recession extremes. And that is completely different. This was a recovery extreme that even gave us a bull market in multiple places throughout the time period of 2022 till 2026 even, or end of 2025. Here, on the other hand, it's the other thing is happening. We are very bullish on interest rates spiking upwards, whereas here we were bearish, and there was quite a lot of interest rate inversion that made the liquidity be able to channel through the markets, whereas here the liquidity is getting shrunk out of the markets because of this high interest rate on the long-term bonds increasing over their short-term friends. People are locking in. Here, people were locking in money on a short-term basis, and they were able always to recycle if they wanted to. Whereas here now they have to lock in their money for 5-10 years to get those interest rates. And when they do that, that really slows things down. With treasuries being sold off because of the Iran war, that's going to keep pushing the prices up for the interest rate, because that pushes the prices of the bonds down. It's an inverse relationship. We got a couple more comments here, so let's see. I'm ready to be hurt again. Yeah. So keep that cash, guys. Keep cash. Hedge. Seems to be the plays. It's not looking bullish no matter what the news or Trump tells you. Okay. So we are now check back on our timer, because we don't have a live Q&A. Yeah, we're like 26 minutes in. Technically, this would be a Q&A for Ivan. I think I kind of said what I had to say. So any questions? We have 16 viewers I see here. So any questions that you guys want to throw in there as you guys are typing? Of course, don't forget to view our link tree, the Moonboys link tree, which is going to be here. This will show all our indicators. Soon we're going to have the Moonboys website to... Oh, that's not us. Sorry, that's somebody else. Hold on. You could find it on our Twitter. Let's two separate words. Podcast. 2 separate words. Yeah, right here. There it is. So you'll be able to see our Moonboys Line indicator. So we have the liquidation heat map, the production cost, the Moonboys Line, as well as the dollar cost. Enable that one. The Moonboys dollarized volume. Oh no, it is enabled. It's just not visible on things like SPX futures. So you need to see so volume. Oh, I guess that's why I had before the futures, because I was able to see the volume. SPX just shows you the price. They don't really have volume for it since it's an index. It doesn't really have volume. But yeah, BTC does. So yeah, exactly, there it is. Yeah, moonboyspod.com. That's the website. See break. I know Matt. I think Matt was trying to go. Is Matt still trying to get on the show? I don't know if you're here, Matt. If you're in the comments or you're watching us on the Twitch. But yeah, if you're here and you want to jump on, be my guest, that will help me not talk too much. Let's pump the beat. We need a little bit of the pump the beat. And of course, while you guys are thinking of the questions, we could look into bubble charts, crypto bubble chart. Let's see if anything is happening in the degen space of the Moon Boys. Of course, with Coke, we had his the bank token seems to now have gone bearish, especially on the weekly. You could finally see the 50 weekly moving average started printing, and we are resisting it. So even though be your bank, great idea, bearish trend on a weekly, especially the SAR. Now these are indicators that are quick to adapt. SAR, the 50-week moving average, when a new project comes out, those are the ones you want to start looking at, especially when it starts showing you a long-term trend. But on a daily, of course, similar. We just hit the SAR bearish, and we're also resisted the 100 daily exponential moving average. Back to the bubble charts. Let's see. Siren. Anybody holding Siren? Might sell another Monday. My third circle put expired, worthless. Might sell another Monday. Yeah, nice. Yeah, we do have circle here saved. So it's still bullish. I mean, yeah, they're really oversold. They're in distribution by selling put. You're kind of. Oh, I have a phone call, guys. All right, give me 1 second, but I'm gonna have to mute myself. This is actually a Charlie Bull AWS support. So I might have to end the stream actually in 32 minutes. If Theo, if you want to pull up to keep this going, if not, I'm gonna have to just end it because I'm gonna have to take this call. They have me on hold. Oh, there's Theo. Stage.
I thought I'd join while you're away from keyboard.
Oh wow, you're outside.
Yeah, I'm just.
I can't really hear anything because I'm on the phone. Oh, okay. All right, they're gonna call me back. Okay, we're good. We're gonna keep going. We're good. All right, Theo. Yeah. Oh, yeah, I heard you. Yeah. You're
cool. I'm back.
Yeah, I could also hear your footsteps.
Oh man, I don't know how to
snowing?
reduce that. No, it's very icy.
Oh my god, you can hear it.
It's like super wet and icy.
Yeah. We have the background song, so kind of like
pump the beat.
People will know the difference. Yeah, so back to the crypto bubbles. Did you know about Siren? You're holding this token?
Well, we talked about Siren on the show a few weeks ago, and then now Gerhard's talking about it, so I just thought I'd mention that.
Yeah, it looks like it's doing something crazy.
I know.
It really peaked at
This was the one on Binance Smart Chain that we looked at.
Yeah, so let me see. Do I have that ticker open? Siren. Maybe not. Siren USDT.
But another one is Bodogos looks really good here. They're only at one SOL. With SOL so cheap, you can pick up a Bodogo for like $90, $80.
It's premium in there. Okay, so let's look at Siren. I don't know why. Oh, I guess it's a perpetual. All index gate.io. Okay, so we'll just look at gate. Yeah, because for some reason it's like a perpetual thing. Oh my god! Wow. Congrats for the people who bought that.
Did it pump after we talked about it?
Yeah, it's pumping today, just now. Like crazy.
Really?
Yeah,
that's crazy.
It went from $1 to $5.
Oh my god!
It did a 5x today.
Holy.
Yeah. So even though, as you guys can see, some things are still pumping. Now, again, Ivan is correct about this. You know, they're all gonna gravitate towards Bitcoin, and if Bitcoin is gonna be reversing, you know, these coins, I don't see them going up much.
Yeah.
Yeah, it's been around. It's been going sideways for a while, so it makes sense for it to go up and pump. Like it's been exchanging hands for a long time now. I don't know if this is a legit chart. Let me just see. Was it?
Well, that's how we thought last time when we looked at it. Like last time we looked at it, it was already up 3x, and it was like a flat line, then a straight line up, and then another flat line sideways, and we were like, oh, I guess the move's over. You know, there's nothing to do. But you're saying from there, it still went and did a 5x.
Yeah. It's crazy. It's crazy. Let me just market cap it. Siren, CoinGecko. Let's just see what CoinGecko. How long have they held theirs? Okay, so only since January 2025. X. Oh no, okay, yeah. So this is correct. Gate.io is roughly correct. Yeah, that's crazy. So it's been going sideways. It doesn't show that here. I'm getting the AWS guys calling me back one second, guys. But yeah, Siren is crazy. Theo, you can do the. Yeah, I'll keep the bubble charts open.
Okay, I will hold down the fort here. All right, let me zoom in and take a look. So we see River. River's been another one we've been talking about a lot on the show for the last few weeks. What is River? Can't really remember. Is it a perps platform or a staking platform? It's a mystery. Everything else is red. I see Coca. Shout out to Coke each and every time. He's busy doing the Thorchain podcast as always. But we look forward to welcoming him back whenever. And I see Man Milk backstage, so feel free to jump up on the stage anytime you'd like to, Man Milk. You're always welcome to join as well. Okay, so for other green ones, I see M, that's meme coin. I don't know what JST is. I see TRX and XMR and World Liberty Finance. Looks like mostly everything else is red. So yeah, shout out to the crypto market. Absolutely wrecked. I think we're sort of in the middle of the bear market here, maybe. I'm still looking for the bull market to come back in like November. That's sort of my target. So I'm thinking we might hit the lows this summer is sort of where I'm thinking. I'd like to see it get down to like 40 to 50K for Bitcoin and then flip bullish on the 125 daily SMA. If it does that, like textbook, because like a lot of people thought that this bull market wasn't going to follow the traditional 4-year cycle. And then sure enough, what did it do? It followed the traditional 4-year cycle. It was a bit muted, but that's to be expected, right? As time goes on, the gains are going to be less and less. And that maybe is a disincentive for some people to get into crypto, but we still love it. We love the technology. We're in it for the tech and the gains as well, because there is still gains to be had. And yeah, we've got our stock bags and they are tax advantaged, and that's fine. But we still like to play with some crypto, and that's great. So if we can get down to, let's say, 40 to 50K this summer on Bitcoin, and then we buy the bottom aggressively, it flips bullish, and we do another 3-year bull run, and this next bull run, we'll definitely see 150K, right? Not financial advice, but that's what we can expect. Maybe we'll see 170K, maybe 210. We'll get up there, but maybe 300 is too spicy this time around. Maybe we have to wait another 5 years, another 10 years. Who knows? Obviously, Bitcoin's going to $1 million one day. So like you could do the math strategy and just keep buying and never sell, and you'll be fine at one point as well. But it depends what you want to do.
Yeah,
Do
I
you want
have.
to actually trade these 4-year cycles? Because there is an opportunity to do so. You can
Sorry for the
outperform
background music
buying and holding.
if it's there, but
Welcome
yeah, no,
back.
I agree. I think I'll just start
So
listening
yeah,
to,
like
but
that's my strategy this time around. Buy the bottom and and hold for 2 to 3 years as we climb the wall of worry bull cycle into 2027, 2028. And maybe we could sell 2028, 2029 at the top again. Because I did kill this bull market. Like I was selling aggressively like spring 2025. And that turned out to be a really good move. So like I feel really good about how I handled this bull market, and the bull market did follow the 4-year cycle. So yeah, I'll relinquish my time.
no, I agree. I also think like the cycles might. The only thing that keeps the
I think Ron's
Bitcoin
still on the phone
cycles.
here. I can't hear him. I can hear the pump the beat in
Yeah.
the background though.
Oh, can you hear me now?
Okay, I'll reclaim my time.
Yeah.
Cool. So that's the plan. Yeah, buy the bottom, sell the top, outperform buying and holding. What else can I say? Solana is another one.
So
So
hold.
Solana right now, what is it, 80, $90? So
Solana
I like
is
holding Bodogos as a proxy to Solana because every Bodogo I hold is
87.
like holding one Solana at the moment. But Bodogos can go up to 2, 3, or 4, or even higher Solana. So it can be a very nice long-term hold. Now, is Solana a nice long-term hold, right? Because if Solana goes back down to $15 or $20 or something, that's going to be very painful. But it would be a nice opportunity to load up the bags. Because imagine you can buy 1,000 Solana at $10 a Solana or something like that, and then it goes back to 300 or something. It could just be insane, right? So I'm not scared of Solana going down. I'm holding these Bodogos bags for the long term, like Matt is with Ethereum. Ethereum for me is more like utility play, right? Like I hold it because I have to. I hold it because I have to have gas. I have to farm OpenSea quests. I need Ethereum for that. So it's not like I want to hold Ethereum, but I have to in order to deal with the Ethereum ecosystem, which is what, 70% of crypto? Something like
Yeah,
that.
but you don't have to hold too much Ethereum. Like a
No,
point
not
one
much.
Ethereum is more than enough to get
Exactly.
started.
That music in the background. Oh, is that hold music?
Yeah, it's the whole music. But that's what I was gonna say. Like, Theo, just basically, it's all you. Once you're finished, just are you able to end the stream from your end?
I can leave, but yeah, I'll just sign off here. If you're watching on YouTube, make sure to like, comment,
Ah, okay,
subscribe,
okay.
everybody.
Yeah. So if so, basically, once you're done and I see that you unpinned, I'll click the end stream button. But
Yeah, no, I'm
for
good.
me,
I'm just out
I'm
with the dog, so I gotta get back. So yeah, thanks everybody for
okay.
watching. We'll see you next week. Thanks for Rom for hosting, as
Yeah,
always.
perfect.
Okay, guys,
Guys, cheers. Have a
take
nice
care.
Sunday and stay safe out there.